Good, full, and comprehensive morning. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Sonali Bassett. Katie Greifeld is off today, and Bloomberg open interest starts right now.
Coming up, President Trump says the U.S. has struck a comprehensive trade agreement with the U.K., marking the first of his promised deals. And it's a win for chip makers as well, as Trump plans to rescind Biden-era AI chip curbs. But pharma stocks take a hit on a report that the president will revive an effort to dramatically slash drug costs. Plus, a Jeff Bezos-backed startup plans to shake up the EV market. Chris Barman, the CEO of Slate Auto, joins Open Interest.
And we're watching some stocks over here, Matt. We're watching the chip makers, of course. They are climbing as the Trump administration plans to rescind Biden's semiconductor curbs. It's a welcome relief for NVIDIA, Intel, and Broadcom.
All right, and on the earnings front, we're still not done with earnings season. A number of consumer stocks dropping after lowering outlooks as U.S. shoppers get conservative. You can see Molson Coors down 6% in the pre-market, Shopify down almost 7%, and Krispy Kreme, unquestionably the maker of the best donuts in the world, losing a quarter of its value, Sonali.
And the big story of the morning, the U.S. and U.K. have reached a trade agreement, but President Trump is offering little detail. He's calling it comprehensive. We'll hear from him a little later, but he has been teasing a deal all week.
We're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good.
Here with more from the White House, Bloomberg's Tyler Kendall. On one hand, you have the announcement from the White House that we are anticipating with the UK. On the other hand, you have the EU threatening more retaliatory tariffs. Net, how convincing are the negotiations that you're seeing cut through Europe?
Yeah, hey, Sonali. Well, if you'll recall that when Keir Starmer actually visited the White House back in February, President Trump openly said that he prefers to negotiate with London over Brussels. And perhaps that personal relationship is what helped spur this announcement we're expecting today. But also keep in mind that the UK and the United States have a broadly balanced trade relationship. That's why the United Kingdom was hit with that 10% levy on so-called Liberation Day, really considered to be the floor, the bottom of those rates. But at the same time, the United Kingdom, of course, also has a VAT as well as a digital services tax that this White House really doesn't like. But our reporting indicates that potentially there could be some changes to the DST on the table here today, as well as also potentially the United Kingdom pledging to boost U.S. agricultural products. We'll have to see how this really does shake out, because that point in particular has long been a sticking point between these two countries. At the end of the day, though, it's not likely that we are going to see a change in that baseline 10% levy, but officials tell Bloomberg News that in the United Kingdom, they've really been trying to focus on bringing down the sector-specific tariff rates. Of course, that would be the 25% on steel and aluminum, 25% on autos, and then pending tariffs on pharmaceuticals. That's something that's going to hit the United Kingdom, but also the European Union, of course, particularly hard in the weeks to come, as President Trump teases that that could happen any day now.
He did say in his post that many other countries are in serious stages of negotiations. This obviously was very serious. Looks like they've been negotiating for 5 years, Tyler. Can this deal be used as a blueprint for others?
No doubt, Matt, that other countries are going to be watching exactly how this plays out today. What sort of concessions are on the table? How quickly did they actually get this done in order to move progress along? Those other countries that this White House continues to point to us that they are prioritizing are, of course, those Asian economies that are geographically close to China, Japan, South Korea, India. These are the countries that officials continuously say that they are making progress on. In fact, you had the Treasury Secretary Scott Bessent yesterday tell lawmakers India in particular is one of those countries that he's been particularly impressed with as we look ahead to this weekend. Of course, another series of talks jump-starting when the U.S. meets with China in Switzerland.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there from the White House. We're going to bring you, by the way, President Trump's trade announcements as they happen in the next hour. So stick with Bloomberg for that coverage. The White House plans to rescind, as Sonali was saying earlier, Biden-era AI chip curbs that were set to take effect on May 15th. chip stocks surging, obviously, on that news, which will let countries negotiate their own chip access. Bloomberg Tech co-host Caroline Hyde joins us now on set. So, Caroline, what do we know about this? And, you know, were those curbs in place for a reason? Is this a national security problem now?
Well, we have to see how much this becomes a headache for trade negotiators, because individual countries are now going to wrap this into their ongoing tariff negotiations. All of this, though, goes back to the AI diffusion rule that was put in place in the last days of the Biden administration that really shocked many, in particular, a lot of allies of the United States. Take India, take Switzerland, take some of these countries like Israel that suddenly were put into this tier 2. There were 3 tiers, China being the toughest, an adversary, basically making it incredibly hard to get sophisticated chips from the US. But then it made it really quite limited for some of these so-called allies to get as many chips from NVIDIA, from some of the chip makers in the US, as they would like. That was a real issue for these countries and these companies. So finally, NVIDIA gets its way. They support the new AI views coming from the administration, and they want to be able to negotiate country on country. Now remember, Thailand, Malaysia, countries where we think perhaps were able to act as intermediaries to allow China to get access to more sophisticated chips from an NVIDIA, for example, they're going to have more tough rules likely coming their way. But for now, AI diffusion not coming in May 15th, big sigh of relief for certainly the chip makers. And Oracle, for example, that wanted to build a big data center over in Malaysia.
I also would love you, speaking of AI, to follow on the company specifics here, because the AI Google or Apple Google relationship has certainly been the talk of the town. And if you overlay that with the threat, frankly, that OpenAI and Perplexity and others are creating, their relationship becomes increasingly interesting, doesn't it? How are they reacting now?
So this all goes back to basically an interesting tactic that perhaps is being deployed by Eddie Q at the DOJ trial. Remember, the DOJ thinks that Google has a monopoly position when it comes to search. So Google's trying to refute that at the moment. They're trying to look at what remedies would be that. Now, the key issue is whether Apple, of course, continues to get that $20 billion from Google to promote Google as the default search option. Eddie Q goes in there and says, by the way, we don't think search is going to be relevant in the way it is currently now. We're going to be moving to generative AI models. We might be interweaving that within our Safari browser, basically downplaying how important Google being the #1 search offering really is in the future. That might be my cynical take, but more broadly, we are looking at a new way in which Google and Apple are going to have to relate. Are we going to see more offerings? Yes, you can get other web browsers if you don't want Google, but what is the future of search going to look like? Is it going to be more Perplexity? Is it going to be more ChatGPT? Already ChatGPT is interweaved within Siri, remember. I don't think this should be such a surprise to investors, but it certainly was yesterday. What a massive move. 150 billion wiped off of Alphabet's share price.
It's interesting. I will say over at Milken, a lot of the executives using Perplexity now instead of Google. That was a really interesting way to watch them do that in real time. Caroline, thank you so very much. We're looking forward to your coverage on Bloomberg Technology in the 11 o'clock hour. Now, in earnings, Crocs has withdrawn its full-year outlook due to macroeconomic uncertainty, and earnings in the first quarter did beat estimates. We're going to discuss this with Bloomberg Intelligence U.S. retail analyst Abigail Gilmartin. You know, Crocs is interesting to me because it's one of those standalone companies at a time where a lot of these shoemakers are really looped into broader conglomerates.
Yeah.
It's a stretch to call them shoes. Isn't it a stretch?
Well, if you're on the beach, it's nice to have those kinds of shoes, I guess.
Yeah, you'd be surprised how many people wear them as shoes all the time. But yeah, no, I think that their namesake brand, Crocs, has continued to do really strongly. And I think we keep wondering if it's a fad, is it going to go away? But it's really here to stay. It continues to outpace its Hey Dude brand and do really well, particularly internationally. So.
Hey Dude is the Sydney Sweeney thing, right?
Yes, Hey Dude.
Okay, so.
Yeah.
It seems crazy that we go from Trump trade war to, AI chip curbs to Crocs.
Yeah.
But it isn't, because we're really getting a look at the consumer, right? Mm-hmm. This is pretty much a discretionary product. So how is the U.S. consumer doing?
So Crocs sales did fall in 1Q, with North America being weak. So the U.S. consumer is pulling back a little, right? And I think that was expected. But they're going to continue to buy maybe their gibbets or other certain things at maybe a lower cost. I mean, Crocs...
Gibbets are the little things that you stick into the Crocs holes.
Yeah, the personalization engine. And those come at a higher margin, and they offer a lower price point for people who maybe don't want to spend all the money on the full new shoes, but they want to update their shoes a little. So I think that it poses an opportunity, and it's a higher margin business, which could aid.
You know, we had a lot of insight from a lot of other companies here. Nike, for example, Bill Ackman talking about Nike really being the only company really in his portfolio
that he invested in,
that he invested in. So what are you seeing among others as well?
I mean, I think that everyone right now, there's just a ton of uncertainty with tariffs, how the consumers will react to that, and when it will really start hitting. I think we're starting to see price increases hit everywhere, and as it does that, consumers are going to pull back on their discretionary purchases. So
there's the direct tariff impact, and then there's that indirect consumer pullback.
You got to wonder if they're going to bring production back to the U.S., right? Because they make them in Asia, right? Vietnam, China, Indonesia, also in Eastern Europe, I think. Any talk of a Crocs factory popping up in like New Jersey?
No talks of it yet. I mean, I guess I wouldn't be too surprised because it's more of a simple product compared to maybe the Nike shoes. That would be a lot harder to move production in a more timely manner just due to the technology needed. So, I mean, it's always a possibility, but at this time, they're really only sourcing about 13% from China. So they're going to be able to mitigate some of the tariffs in the near term, but it will add additional costs.
Cool. All right. Great to get some time with you. Abigail Gilmartin there of Bloomberg Intelligence. Let's get a check on futures this morning. Obviously, we're looking at some positive sentiment. If Trump manages to clinch a full and comprehensive trade deal with the UK, something that Scott Besant tells us takes years to negotiate, and maybe the U.S. has been talking to the UK about this for 4 or 5 years, that would be positive for these markets. And the S&P futures are currently up about 2/3%. NASDAQ futures up more than 1%. That's on the chip news as they're so heavily weighted. Russell 2000 futures, even the small caps, gaining well today.
But there is a down arrow story that it's drug makers. They are taking a hit on a report that Trump may be targeting drug costs. We're going to give you the details on that next. This is Bloomberg Open Interest.
Let's get to high interest now. Look at what's making headlines around the world. The Bank of England is cutting rates by 1/4 point to 4.25% as the global trade war weighs on its growth outlook. The split decision surprised markets by showing a more cautious than expected approach towards easing monetary policy. The BOE forecasts inflation to peak at 3.5% in the third quarter this year and expects growth to be 1 full percent. The Gates Foundation is celebrating its 25th anniversary today by announcing plans to close shop by 2045. The philanthropic juggernaut reshaped the landscape of global public health, putting over $100 billion into humanitarian causes since its founding in the year 2000. Bill Gates is committing to 20 more years of aid, over $200 billion in total. The news comes at a time that many deem perilous given the Trump administration's recent assault on foreign aid. And another thing tariffs are impacting is banker bonuses. Investment bankers, hedge fund employees, and asset management professionals are all poised to see lower year-end incentive pay in 2025. This according to a report from compensation firm Johnson Associates. The forecast follows a chaotic period sparked by President Trump's tariffs, which has slowed deal demand. Bankers who help companies raise equity will likely see the steepest drop in payouts of as much as 20%. Shanali.
And meanwhile, Matt, shares of drug makers are down after a report that President Trump is reviving a plan to try to slash drug costs. According to Politico, he's planning on signing an executive order tying the amount the government pays for some medicines to lower prices abroad. Joining us now, Bloomberg health reporter Damian Garde. Now, this executive order, as Politico reports, is expected for next week. But how in flux is this, and what is the ultimate impact expected to be?
Right. So as with so many things with this administration, It could happen or it could not happen. It's kind of the information we have. But as far as the impact, as you mentioned, this would be the revitalization of a plan that Trump tried to push forward in his first term that would have seismic effects on basically the revenues of drug companies around the world who count on the United States as the largest market for prescription drugs. And it was vociferously opposed by the industry that last time and ended up kind of falling apart legally toward the end of the second Trump administration, basically for process reasons. If this were to take shape, and we don't know the details of it or exactly which medicines it would affect, it would be massively worse for global drug makers than the policy that they all complained about that the Biden administration enacted that allowed Medicare to negotiate the prices of certain drugs, an escalating number going up over time.
Damian, all of these drug makers charge people in foreign countries so much less for their products than we pay in the U.S. And when you ask the CEOs, they blame the middleman. They say, hey, it's not us, it's these PBMs. What's the truth? How come I can get, Ozempic for $150 in most European countries or thereabouts, and I'm paying over $1,000 per month to get it here?
I mean, it basically boils down to how those countries pay for their drugs versus the United States. Most European nations have a socialized medicine system where the prices are negotiated on a countrywide basis, and that results in a lower list price, we can say. Now, what the companies would point out is not only the middlemen, the PBMs, that take a cut of basically the spread price between what they list it for versus what it actually costs the patient out of pocket, but drug companies say, and they say they agree with the president in this case, that the rest of the world is functionally freeloading off of the United States, that European nations should pay more and Americans should at least pay less out of pocket, although drug companies wouldn't necessarily volunteer to slash their list prices. Where this has been problematic for them is that while the president is very fixated on that differential that you mentioned, their solutions to it don't seem to be getting a lot of purchase in the White House. It would appear that the White House is moving forward with a plan that would reduce the cost of medicines, but at great cost to the pharmaceutical industry.
Damian, the pharmaceutical industry is in a flurry. They're fighting really hard to make sure some of these pricing plans don't take effect. How do you see the fallout shaping up, given that we have some information now about how the administration plans to approach Medicare?
I think the drug industry might be looking at this as a little bit of a gambit in an ongoing negotiation that they've been having with the White House. So we know that Trump is fixated on, one, the cost of medicines, as you mentioned, and then more broadly on manufacturing and how American companies should do more of it in America. We've seen a flurry of announcements from global drug makers for basically every dollar that they intend to spend in the United States over the next 4 years gets a press release. This is pretty transparently them saying, don't tariff us, continue, reinstate or extend the Trump tax cuts that incentivize us to invest in the United States. And if we do so, perhaps we can negotiate on these other things. Now, the most favored nations policy that you mentioned, the drug pricing policy, would be an escalation of that on the White House's perspective. And I think drug companies are hoping that perhaps the White House can still be swayed away from that if they commit to more of Trump's agenda.
Damian, great having you on. Thanks so much for talking to us about this. Bloomberg's Damian Garde talking about the drug pricing and the subsequent moves that we've seen in pharmacy shares this morning. In the next hour, by the way, we're going to speak with the CEO of GoodRx, Wendy Barnes. She joins us at 10:30 a.m. New York time, assuming that Donald Trump isn't still talking at that point.
Yeah, we don't know how long this announcement is going to be. We're going to look at some more movers on our radar because Matt was saying it is still earnings season, the season that never ends. Peloton posts its third straight quarter of sales decline. Stock really taking a hit this morning, down more than 7%. Fun fact, this was a big David Einhorn pitch late last year, wondering how he feels about it now and how quickly he's trying to get that turnaround. Krispy Kreme also taking a massive hit, down 25%, halting dividends, pausing expansion inside of some McDonald's. Carvana, though, doubled profits in the first quarter. They see stronger sales throughout the year, up more than 6%. How do you feel about those used cars, Matt Miller?
You know what? I'm very closely watching used car prices because they're going for much higher at auction than many expect. But Krispy Kreme has my attention today. The stock has fallen more than 50% year to date, and it's got such a great ticker, DNUT, D-N-U-T.
Maybe it'll be acquired one day. Who knows?
Yeah, well, I would buy it.
What happens when asset prices fall?
Coming up, Franklin Templeton's Katrina Dudley anticipates stagnation in equity markets as earnings trend lower. We're only expecting, I think, now 8% earnings growth this year. At the end of last year, we're expecting 14%. We'll talk to Katrina about that Next, this is Bloomberg Open Interest.
Now, the IMF expects the trade war to have a much bigger impact, a negative impact on the U.S. economy than on other countries. Apollo's Torsten Slok put together this chart that shows U.S. GDP growth revisions more severe than that of the biggest trading partners, including China. Joining us now, Katrina Dudley, Senior Investment Strategist at Franklin Templeton Public Markets. Now, so much of this is about who has the power in these trade negotiations. And if you are in a situation where the U.S. is exporting more than it is bringing in, say the EU, are you watching that more than the deals that are getting done right now?
I don't think you want to be talking about power as it relates to tariff negotiations, because the key word is it's a negotiation, and you need to have partnership, you need to have collaboration, you need to have both parties agree to a deal. So you can't have one person come in and say, these are my terms, take it or leave it, because, you know, the BATNA, which is, you know, your best alternative for someone else, may just be, you know what, they're not willing to even negotiate the things that matter to me and are really important. It pays for me to walk. And I think that then will bring, you know, people back to the table. So I think that you just need to think about it as a negotiation, not as a power play.
I mean, the fun thing is that that's precisely what Donald Trump has said he's going to do, right? He's going to lay out his terms and say, take it or leave it. Now, that could be a negotiation tactic in itself. What kind of deals do you expect? I mean, we're going to get a UK deal, but that's probably not the most important one.
No, but it's really important, and it sets a tone for everyone else. Going back to what you said, if that agreement is not a we set the terms and they accept it, it's going to show that willingness is for that give and take. And so that's why I think it is more, it's the narrative around this deal versus the actual terms itself, and the fact, as you say, it is a small agreement. So I think that we really want to think about what happened during those negotiations and what we can see from that in terms of, you know, do we have takeaways?
All right, we're going to keep you with us. We've got the open up next. Futures are positive. And if you look at them, you'll see that we're getting big gains in the tech stocks because the chip stocks. This is open interest. We are moments away from the start of trading on this Thursday. This is Bloomberg Open Interest. I'm Matt Miller. We're told by the president, a full and comprehensive trade deal with the UK. We're going to hear about that in just about 30 minutes time. But that has led to some optimism in the S&P. We were up yesterday at the close. Futures are higher as well, 0.2%, even higher on the NASDAQ as the president looks to rescind some of the chip export curbs that we had seen put in place at the very end of the Biden administration. You have Aspen, I believe it's Aspen Insurance Holding. They're going to start trading today on the New York Stock Exchange. That's why they're ringing the bell there. So some smaller IPOs. I think it's like a $400 million deal going out at $30 a piece. And then Celiac Disease Foundation, I guess, making the world a more gluten-free place. Shonali, what do you see in terms of the stocks to watch at the open?
Let's take a look at what's happening because of the White House planning to rescind those Biden-era AI chip curbs that were set to take effect on May 15th. The chip stocks are surging on the news. NVIDIA up about 0.8%. Intel really feeling the love, 3.9% higher at the open. Broadcom up about 1.5%. This is driving the NASDAQ higher, Matt.
All right, yeah, that's absolutely behind the gain in the tech index. In earnings, a number of consumer stocks dropping big time after lowering their outlooks. U.S. shoppers may be getting more conservative when it comes to beer. Molson Coors off more than 8% in the cash trade. Shopify down almost 3%. Krispy Kreme, the big standout to me, maker of donuts from my childhood, down 27%.
Brutal.
An absolutely brutal drop. We're back with Katrina Dudley here, Senior Investment Strategist at Franklin Templeton Public Markets. And I want to get those red arrows off the screen because last time you were on with us, you were pretty, I don't know about bullish, but you were pretty positive, these markets. And we were right at that sort of post-Liberation Day low. So are you still constructive? Do we have further room to run above 56, 5,700 on the S&P?
I want to break that down into two parts. I think as on a longer term basis, like a 1 year out, we are in the optimistic camp. We actually think from like the base where the market kind of troughed, you've got like 20, 30% upside from those levels. But we moved very fast and very quickly. And I think that the market is at that point where we probably just need to take a pause. And we've got a lot of news that we need to digest. You just mentioned the earnings. We're looking to digest some of these negative earnings that are coming in through the consumer. But one of the reasons we were so optimistic coming into this year was the breadth of earnings expectations and the breadth of the drivers of the earnings versus it just being the Mag 7. It was across all of the sectors. And I think that that narrative, despite what we're seeing today in a number of these consumer-facing stocks, still holds.
You know, it's interesting. Despite some of that negative guidance we've seen, couldn't believe it. I've been sitting on a panel this week. A question comes in about whether you can see the S&P 500 actually hitting a new all-time high this year, despite all of these challenges. Citadel Securities president goes, sure. I mean, do you think that that's possible?
I definitely think it is. I think that, look.
Wow. So what was the high? 61.44?
Yeah, so you have some people as high as 7,000. I'm not necessarily sure we quite get that much of a rally. But I think if you look at it, we're in the depth. We've had Liberation Day. Would you say that's probably the worst of the news that we've had to digest and going forward? If I have a look on the tax side of things, we have the need to extend some of those tax cuts. But if I look at what we last time when we had a president needing to do something like this, you're probably expecting around August. So that's going to give the market the certainty they need. I don't think this is going to extend right until the end and right until the deadline. So if I look at it, I think that the bad news is actually kind of the worst is behind us. And that's what drives markets, which is that earnings expectation and the positive expectations of growth.
In his first 100 days, we've seen a flurry of executive orders.
Yeah.
And it's been the opposite of certainty, right?
Mm-hmm.
Do you think that we get to certainty in this administration, having looked at Trump 1.0, or is this president different than that? Like, why do you think he's going to bring us certainty?
I don't think we're ever going to get certainty in any American administration. Why? Because the economy is so dynamic. This country is so dynamic. Things change all the time. And I would actually say that certainty is complacency. So I don't think you're going to get that. But there needs to be certainty in terms of certain events that we know, the kind of known knowns. We know that the Tax Act is set to expire. We need to have that resolved. And so that's where we're looking at that certainty coming in, is in response to things such like that, which is, getting certainty. But if you ask me, do I want certainty in the White House? Maybe not, because I'd like to make sure that he's adapting and responding to what's happening on the ground in what is a dynamic economy.
You know what's incredible to me is I think when you came into this, you had a red sweep. So there were a lot of investors who believed there would be no checks and balances in the White House. But since then, you've seen a few. You've seen conservative and small business groups come out and sue around some of those Liberation Day tariffs. You've seen the bond market serve as a bit of a crutch here. Yep. You've seen Besant. You've seen the Treasury Secretary come out and be a check and balance, and even some members in the Republican Party calling for some prudence with the fiscal plans here, aren't you? Somewhat, sort of.
I mean, what do you think, Katrina?
Is it enough?
Does this administration have checks and balances, the type we're used to in the United States of America?
Or at least enough to keep the market calm? That's what I'm asking.
I think that we do have checks and balances. And what's the ultimate check and balance? It's actually sitting in Washington in our Supreme Court. And I think that that's where I'm an immigrant into this country, and that's one of the things where I really do admire. So I do think the checks and balances do exist, but I do think, unfortunately, because it's through the court system, it may just take longer for them to come in place. People like Besant, I think, is more of a tempering in terms of making sure that there's the voice of rationality. So in terms of our deficits, it is one area where we are concerned about. And as we look at our forward expectation for rates, it's something that we think really does need to come into play in the United States, is the fact that we do have have this significant deficit. And those DOGE cuts are coming in, but they're coming in much smaller than we were anticipating, or the market was anticipating.
All right, Katrina, it's been great having you on the program, and you've been right so far. So we're going to continue to watch your calls and this progress. Franklin Templeton's Katrina, Dudley. Shanali, let's get a look at some of the stocks that are moving in the market right now.
Yeah, let's bring in Bloomberg's Isabelle because a lot is moving under the surface.
We're looking at Molson Coors. We have the stock falling by 8%. That's the most intraday since 2024 April. So the company lowered its full-year guidance amid a challenging consumer environment. So they previously said that the profit would rise in high single digits, and now they're estimating it would decrease in low single digits. The same goes with the decline in sales. They also expect low single digits, lowering their previous guidance. We have Barclays saying the significant miss in top and bottom line, along with a full guidance cut, will come as a real surprise to markets. Up next is Shopify. So this also is a stock that you see is seeing some pressure today. We see sales in the current quarter just meeting expectations. So again, that emphasizes how tariffs are really impacting the market going forward, because analysts were expecting a growth of 23%. Investors are really struggling to determine how the trade war will affect Shopify. This stands in contrast with Tapestry. So that's a handbag maker. We have Tapestry saying that tariffs are expected to have just an immaterial impact. In fact, they raised their annual outlook to a gain again. So they say that their analysts estimate its exposure to China to just be in the single digits. And last, we have ARM Holdings. This also is a stock that's seeing some pressure today. It's down by almost 7%. They gave a disappointing sales forecast, raising concerns about the slowdown in the chip industry. So revenue will be $1 billion to $1.5 billion. Wall Street estimated a number at the higher end of that range. So profit estimates were also lowered, and the company blamed the forecast on timing of new arrangements. We have price target lowered by HSBC, KeyBank, Raymond James, and others. Back to you guys.
Interesting, because Shopify in particular, Matt, the tagline is sell locally and globally. So you would think it would be some sort of beneficiary in the middle of all this, but the fact that it's not, I think, says a lot.
Is it a Canadian company? Shopify, I believe, is a Canadian company.
It is.
All right. Yeah, a lot of interesting undercurrents there for sure. Interesting to see Tapestry gain, right? The maker of, like, what, Coach, Kate Spade, all of these kind of aspirational handbag
Very
brands.
impressed that you know this.
Thank you. Thank you very much. I've studied up. Isabelle Lee, pleasure to have you on the program. Coming up, the EV race is getting a new, affordable entrant. We speak to Chris Barman, the CEO of Slate Auto, next. This is Bloomberg Open Interest.
And this is Bloomberg Open Interest. We're going to take a quick check on stocks because, of course, we are up on the day. We have the S&P 500 flying about 0.6%. NASDAQ 100 more so, almost 1% higher. Even the small caps, Russell 2000 up about 0.9%. Green on the screen ahead of that big announcement from President Trump in regard to the UK trade agreements. It's time now for the top calls. Some of the analyst action in focus this morning. First up, Uber is getting downgraded at Wedbush after reporting mixed first quarter results. The firm says the business faces a lack of clear catalysts in the short term. Uber down this morning about 0.9%. Next up, Coty getting downgraded at Deutsche Bank. The beauty company missing estimates and cut its outlook. It's the third time the company has lowered its guidance. Shares still up, though, even after the downgrade. Finally, Disney is getting raised to a buy at President Capital Management. The company raised its outlook for the full year and announced a plan to build a new Disneyland theme park in Abu Dhabi, Matt.
All right. Yeah, very interesting stuff there, and a story we've been following really closely. Something I have been watching very closely ever since I found out about it is a newer, low-cost entrant in the EV race. And I think most interestingly, it's being backed by billionaire Jeff Bezos. It's called Slate, and it offers a kind of Build-A-Bear style of electric vehicle. It starts as a blank slate, two-seat pickup truck for about $25,000 before incentives. And then each buyer can add accessories like side stripes, stronger bumpers, infotainment screens. I mean, you could even change the little truck into a 5-seat SUV. So obviously, I care about this. Joining us now is the CEO of Slate Auto, Chris Barman. Chris, great to have you here on the program.
Thank you so much for having me.
I think the excitement around this can't really be overstated. And I guess part of it has to do with the the price point. After incentives, it can cost less than $20,000. A lot of people on the internet don't even believe it. They say it's vaporware. Are you really going to come out with a truck at that price?
We've been focused for over 3 years now on designing an affordable vehicle that, as you mentioned, is a platform upon which people can accessorize it. So we took everything out that wasn't a car and wanted to really get back to the basics and then put the power in the hands of the consumer to decide what accessories they wanted to bring back into the vehicle, not only at time of purchase, but based on their budget and based on time. So accessories don't have to be added at the time of purchase. It can be along the journey of ownership, or the second owner can take and totally modify the vehicle into what they want it to be.
You know, since affordability is such a big part of this story, I'm wondering how you are preparing for any impact of tariffs. Do you know for certain that it won't impact the cost of the cars?
So we've been very focused on American reindustrialization. So we've selected that we will produce the car in Warsaw, Indiana. We want it to be, you know, it's American design, American built. We've been selecting that the parts that go into the vehicle are also very much American made. So we're very well insulated against that, so that as tariffs may fluctuate with time, we want to be able to insulate ourselves against that.
It seems the automotive industry is incestuous. And I mean, you were at Chrysler for a couple of decades before this, but I'm talking about now, right? Jeff Bezos-backed Slate. He also put a lot of money into Rivian. That didn't go very well. But do you use that to help you get lower cost access to suppliers, that relationship? Do you consider, I have so many questions. Do you consider Scout a competitor, but Volkswagen has also put money into Rivian? And how do you work through all of those complexities?
So we have a number of American innovators who are investors. Jeff is one. The Walter Group has been a big investor for us. General Catalyst, also a great supporter. But we're separate. We really see that we're going into a space that the auto industry isn't in today, and we're making our own partnerships and working within the ecosystem of the supply base so that we can get the best parts that are available and keep the costs affordable.
Who are your competitors, by the way? I mean, who is offering a $25,000 pickup truck?
Yeah, so Matt, the way that we've been thinking about it in the time that we've been working on it is roughly 55 million vehicles are transacted every year. About 15 of those are new, about 40 of those are used. Average cost of a new vehicle is about $50,000, a $900 monthly payment. Average cost of a used vehicle is about $27,000, about a $500 monthly payment. And a recent study came out that said if an individual makes $100,000 a year, they should spend about $400 towards a car. So it's even becoming a stretch at that point for somebody to afford a vehicle. And roughly 70% of households and individuals don't make $100,000 a year. So it's becoming really a stretch for people to get into a vehicle. We almost view the used car market, and that pool of 40 million vehicles is where we're going to see a lot of people come to Slate and consider our product.
Fascinating. No, I see it actually kind of differently. I'm wondering if you look at the empire of Jeff Bezos, but also the other backers, as you've been talking about, Slate and Amazon, Slate and Rivian, do you see any potential for crossover or partnership?
At this point, we do not. We're really working independently on our product and what we can do to bring it to market. Of course, we're always open to talking to anybody on what might be a good partnership, but we are singularly focused on bringing this safe, reliable, affordable vehicle to market.
I guess the Maverick is one that costs around the same price, right? Ford's small pickup truck could be a competitor. I'm just thinking about who uses this. One of the complaints, one of these sort of online complaints has been range. And I think it's, 150 miles, but you can add on an extended range battery pack to get 240?
Yes, that's correct. So keeping cost in mind, the blank slate, it can be in 150 miles of range, as you mentioned, or upgrade to 240. When we looked at that and selected that size of pack for 150 miles, the average commute of a person today is about 37 miles a day. So you can get a few days out of the vehicle before you actually have to go back and recharge. So again, keeping that affordability in mind, but again, power of choice. If somebody needs more, we do offer more with the 240 mile pack.
My buddy Keith Naughton, who covers Ford for us in Detroit, asks if the truck was inspired by the pickup emoji on the iPhone.
I was thinking the same thing.
It looks so similar. How did the designers approach this?
Yeah, we had a number of inputs, and we have a fantastic design team. I mean, the creativity that they've brought into the vehicle and the fact that, they stepped away from what most designers do of saying, don't change the design. They've leaned into it to say, hey, we want people to modify the vehicle. And they took inspiration from a number of areas. A lot of it went back to those trucks of the, 80s and 90s. Yeah. Back in the more basic format of what they look like, but wanted to have a little bit of fun and a little bit of personality. And so we hope that's what you see. We talked a lot about what face do you want to see, what look do you want to see. So when they put the proportions together, they wanted it to look athletic. They wanted it to look strong in stance, even if it is a compact vehicle. And then through the front of the vehicle, they lowered the hood a little bit to give like a little clip to the headlamps. So it looks like it's just giving you a little bit of a stare.
I love a good sports car.
Yes.
Anyways, the other question I have for you, given that the Trump administration is so focused on manufacturing in America, and this is something that you're focused on as well, what is the roadmap? What are the lessons learned in terms of what really needs to happen to make that more possible? Because there are a lot of doubts that this could be done at scale.
Well, and Rivian has had real problems. I mean, they haven't done well.
So our approach is when we've simplified the vehicle, it will help us on that journey to manufacturing. So where many other vehicles have about 2,500 or more parts that go into the vehicle, our blank slate has about 500. So we've really simplified the manufacturing in our approach. We use composite panels. It allows us to help with that ease of wrapping, but it's also helped us save on the capital expense side where we don't have to invest in a stamping operation. We don't have a paint shop. And through doing that, it's made our footprint for our manufacturing facility about a third of what other automotive manufacturers are. And it allowed us to go in and re-industrialize in existing facilities. So the location that we've selected within Warsaw, Indiana was formerly a printing operation that made catalogs and phone books, and it shuttered in September of 2023. But the footprint was right for us, and we're going into that community. They've been very welcoming to us. We're excited to be there, and that's where we'll have our operation.
By the way, I want to point out, I'm not criticizing the Rivian truck. I love them. I think they're fantastic, but they're expensive, and they haven't managed to produce more than 50,000 a year. So just quickly, what are your expectations for volume?
By the end of 2027, we expect we'll be at 150,000 units a year.
All right. Very cool. I hope we can have you back on. I hope you join me on my podcast.
Oh, I'd love to.
Bloomberg Hot Pursuit with Hannah Elliott. Chris Barman there of Slate Auto. When we come back, we're going to talk about the president and trade. This is Open Interest. This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. 25 minutes into the trade, we're gaining on the S&P almost 0.5%. The Nasdaq a little bit of a stronger gain, 0.7, as investors are hopeful on chip stocks. In terms of that, though, Nvidia is down about 0.2%. That doesn't help. Intel is up, and that really doesn't help much either. Warner Brothers turning around higher, hopes it'll be broken up. Carvana crushing it up 10%, and then the consumer a worry for Molson Coors and Shopify. Shanali?
And we are moments away from President Trump's announcement of a comprehensive trade deal between the U.S. and U.K., as he calls it. Bloomberg's Tyler Kendall at the White House. What do we expect?
Yeah, hey, Shanali. So while President Trump says it will be comprehensive, we are expecting it to be limited in scope. The Treasury Secretary has called these agreements in principle before. And a couple of things to watch out for. While the U.S. and the U.K. have a broadly balanced trade relationship, they do have a VAT and they do have a digital services tax. And our reporting indicates that the latter, the DST, could potentially be changing here as part of any potential agreement. The other thing to watch, whether or not the U.K. pledges to boost agricultural imports. We had the Agriculture Secretary say in an interview this morning that this deal will be very good for farmers. But of course, this has long been a sticking point between the two countries. At the end of the day, likely that 10% baseline tariff rate isn't changing, but we're watching to see if the U.S. lowers those sector-specific tariffs, 25% on steel and aluminum, 25% on autos, and whether or not we get any glimpse into what pharmaceutical tariffs could look like for the U.K. as well.
Yeah, absolutely looking forward to getting that kind of detail. Bloomberg's Tyler Kendall here talking about the U.S., UK, and a potential deal. We're also watching to see what the EU has to say about tariffs. All of that coming up in the next hour. We'll bring you President Trump's trade announcement from the White House. When it happens, this is Bloomberg. This is Open Interest. We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Sonali Bassett. Katie Greifeld is off today. And coming up, President Trump touts a full and comprehensive trade agreement with the UK, as he calls it. The president is set to give more details this hour. And as drug makers campaign against Trump's pricing plan, we're going to get industry insight from the CEO of GoodRx, Wendy Barnes. And Wall Street bonuses are set to drop as tariff turmoil causes economic uncertainty. Details on that ahead.
All right, a lot of that obviously hitting markets. I was going to say pretty hard, but not too hard in terms of size, definitely in terms of direction, right? The S&P 500 is up. It's only a 0.5% gain. We finished up about that much yesterday as well, but markets are optimistic for some details on a deal. Not overly optimistic, as you can see from the numbers. The NASDAQ is up 0.75%. Also, that makes sense directionally because the president is looking to rescind export curbs on chips. And that should be good news for the chip makers. We saw that NVIDIA was not really gaining on this, Sonali, so I think really interesting. And then what do you make of the 10-year? 4.30? I mean, we're not near the danger zone. I think you were talking with some people at Milken yesterday.
4.4%, but 4.75 is really where it's like, do you get there this year or do you get lower? But I've got to say, on that optimistic note, most sectors are actually in the green today, barring healthcare, which of course we know the industry is under some threat. We are moments away from President Trump's announcement of that trade deal between the U.S. and UK. Hopes are high, as Matt was saying. Here's a preview with Bloomberg's Tyler Kendall at the White House and Lizzy in London. We're going to get both sides of it. Tyler, what do you expect, at least from the Trump perspective?
Yeah, hey, Sonali. Well, the administration is hoping that this is going to be the first in a series of announcements. And while President Trump says that it will be comprehensive, if you listen to the Treasury Secretary Scott Bessent on Capitol Hill yesterday, he described these first agreements as being agreements in principle. It's going to take months to paper them into fully fledged deals. And we've been talking a lot about this morning, that the U.S. and the UK have a broadly balanced trade relationship. That's why it was hit with that 10% levy on so-called Liberation Day, really considered to be the floor of those tariff rates that were announced. But the UK does have a VAT and it does have a digital services tax, and our reporting indicates that the latter could be on the table today. Officials telling Bloomberg that they were considering reducing that $1.1 billion DST that largely hits U.S. tech companies. The other angle to this that we're watching from what the U.S. would like to see out of the deal is potentially boosting U.S. imports of agricultural goods. You had the Agriculture Secretary in an interview this morning saying that this deal will be very good for American farmers, but it remains to be seen if they really can clinch a deal in that way, considering this has long been a sticking point between the two countries. Ultimately, Sonali and Matt, we're not necessarily expecting that 10% tariff rate to necessarily go away, but we're watching how this White House reacts when it comes to potentially reducing those sector-specific tariffs. Of course, the 25% tariff in place against steel and aluminum and 25% against autos.
All right, Tyler, we want to get to Lizzy right now in London. And from a UK perspective, Lizzy, you know, if I run an ECTR function on the Bloomberg, ECTR Go is a great way to look at goods trade. And if I put the UK in the box up there, the United States is the most important single nation that the UK trades with, right? I know the EU is a big bloc. But how does this look from the perspective of His Majesty's government?
Well, it's the biggest individual nation, but as you suggest, the EU is twice the size when it comes to the relative scale as a trading partner, and that's got political consequences. The UK needs to balance those relationships. Tyler points to some of the potential things that could be on the table here: agriculture and digital services. The closer the UK cozies up to Donald Trump, the less room for manoeuvre it has with Brussels. And of course, we've got that UK-EU summit coming up later this month. That is a relationship that they really need to tend as well. But look, isn't this a difference from when Barack Obama said post-Brexit that the UK was going to be back of the queue when it came to a US trade deal? Now, Keir Starmer's made the UK front of the queue, which surely vindicates this softly approach he's been taking to Donald Trump. But we've got to see what the terms of this are. That's the political significance. Economically, really, it doesn't do much to move the needle for the UK. We were hearing from the Bank of England governor just earlier today. We had a rate decision here. He was talking about, it's good that anything that reduces uncertainty is good. Anything that brings freer trade is welcome. But hopefully, as Donald Trump says, it does lead to more deals. And that suggests that a US-China deal would be more significant even for the UK than a US-UK trade deal.
Lizzy, I want to pull up a chart here that we made a little earlier that shows you the U.S. trade relationship, total trade between the EU and the U.S. and the U.K. and the U.S. And you can see what a minnow that the U.K. looks like relative to the EU, which is planning more retaliatory tariffs here. You mentioned the potential to set the stage for more deal making, but with this much of a differential, with the EU really having the advantage here in terms of how much that they're exporting relative to the United States, how much of a bigger deal, frankly, is the EU story with the US?
Wouldn't dispute that at all. The EU is a bigger fish to fry for Trump than the UK, but the UK needs to balance that EU relationship and the US deal for sure. When it comes to the trade relationship, that has been the case ever since Brexit. But, politically for the UK, this is a huge deal to be at the front of the queue. I think that is why Keir Starmer has taken this softly approach, because the UK cannot take such a retaliatory stance as the EU has been taking against Trump.
All right, Lizzy, thanks so much for joining us. Bloomberg's Lizzy Burden there and Tyler Kendall at the White House. We're going to be catching up with you after this event as well. And for our viewers, we'll bring it to you from the White House as soon as the president starts to speak. Let's get back to the markets here. We won't get away from trade, obviously, because the markets and trade are so closely connected. But Stephanie Guild joins us here in the studio, Robinhood Financial Head of Investment Strategy. These headlines have been driving the equity markets, it's safe to say, on almost a daily basis here. What do you expect from this full and comprehensive U.S.-UK trade deal?
Probably just an outline of a deal, I think, is sort of the expectation, in line with a lot of other people's expectations. But as was just said, it's maybe the easiest one for us to do, in the United States to do, because it's the least impactful and maybe just sets the tone of one's coming. So it's positive from a signal perspective, but I don't think it's that big a deal in the grand scheme of what's going to happen. China's going to be way more important. Japan's going to be way more important in EU.
It's interesting. We were talking a lot about that hope, that optimism that's under the surface, and you really do see it in the trade today. Despite revisions, withdrawing expectations for the rest of the year from some consumer companies, you actually have consumer discretionary leading the way in the S&P 500. Is this a signal of...
On a one-day basis?
On a one-day basis.
Okay.
One day doesn't make a trend, but I do think it's a sentiment barometer here. If you see trade deals being cut, is the read-through effect ultimately that investors are hoping that the U.S. consumer, the hit to them, is not going to be as bad? Is that the ultimate hope under the surface?
Yeah, I think there's always hope, but as we always say, it's not a strategy. And I think we have to be, unfortunately, patient, which, as Warren Buffett has said, is, sometimes a liability and sometimes an asset. And I think in this moment, it's an asset because we still have higher volatility than we've had in a long time. The market is still moving at least 1% day to day, given the day. And I think you have to kind of hold out for this. We're seeing from Crocs, right? They removed their guidance. We've seen a lot of consumer discretionary names do that because they just don't know what the future is going to be.
It's interesting. They were up upon that report today, even with the withdrawal. If that happened 2 weeks ago, do you think the same thing would be true?
Yeah, no, definitely not. Stephanie, what do you think about diversification right now? It's been such a loser for the last 5, 10, 15 years, right? I mean, you should have just bought the S&P and left. But now, are you advising clients to look at Europe, to look at Asia, to look at emerging markets?
Yeah, I mean, we say that you need to invest for every outcome right now in this, particular environment. And we launched Robinhood Strategies, which actually takes discretion of customer money. Had it for about 6 weeks now. We are investing and kind of thinking about it in 3 different buckets. The 3 buckets are, tariffs don't last much longer. We kind of have a bunch of deals very soon, and things can continue to grow. We're kind of putting like a 20% probability on that right now, but we're willing to change our probabilities in any given moment. The other probability is...
And you may have to.
We might have to.
At any given moment.
But we have like investments for each of these things, right? The 50% probability, like the main one is sort of that we have some tariffs that stay for a while, but they don't stay super high for a long time. And we kind of muddle through, but it doesn't bring, interest rates down. It doesn't necessarily bring inflation down a ton. And you have to invest in what we say is like consistent winners, low volatility names, and some non-cyclical growth names. But we are putting a 30% probability on tariffs stay high for a long time. I think the stickiest part is going to be China. And when I was at the Milken conference, I felt like that, right? Like it is an effective embargo. And
wait, you were both at the Milken conference this week?
And we are back here to be with you today, Matt.
Wow.
We wanted to sit right next to you this morning.
I saw Shonali from afar and never got to talk to her there. But I think there's that's what we're doing. When we have that, that's the probability you could potentially go into at least a mild recession, and we have some safer assets for those kinds of investments.
So these are some scary thoughts, right? Like these are some really big risks, but we were talking about, Milken, that people were talking about the potential again for a new all-time high on the S&P 500. What would need to happen to see that retracement?
I think you just get a bunch of deals, like you have that one bucket of, what we're putting some non-cyclical growth names in, because you get a bunch of deals quick. But the meaningful, like lower tariffs, right? Like maybe for us, actually, the tariffs come down and vice versa, right? So that it ends up being pretty mild.
You mean come down to no more tariffs, which seems really counter to the whole raison d'etre the last 40 years of this president. And he loves tariffs. It's the most beautiful word in the English dictionary.
Because he wants to bring manufacturing back here. He wants to bring, there's an alternative.
But he also wants to replace the income tax, which, by the way, I'm very happy to not pay taxes, but he wants the revenue from tariffs. So that would mean getting down to zero makes very little sense.
I just don't know how we do that in the near term, because if you think about the last time we had tariffs that much and no income taxes, it was, this is not a global world. Like, we didn't have the technology we had. I think it was the 1800s that we had that. So I just don't know if that extreme can happen. But when you're Donald Trump and you're negotiating the way that he does, he always goes really, really hyperbolic.
Something I was looking at, look at the numbers, right? In all of the uncertainty, just look at the data. And one thing with the EU, for example, as this negotiation continues, it's really services that the U.S. is exporting.
Yes.
So the whole notion of transforming this economy into a manufacturing one to make money is something I'm struggling with.
I mean, me too. I think this is a way in which we can make better deals, because I don't see a world in which we're not going to import our goods and export our services. But if we can make better deals for what we pay for things, I think drugs is an area that we do need to make improvements on. Like I heard you say earlier that we subsidize the rest of the world. That should change for us. That is a crazy amount of inflation for us. But if, and I think oil, we actually have a benefit in terms of having so much natural gas. Can we have set up some deals that way? I think there's a world in which we end up in a better place, but I just don't think, to your point, that we're going to end up in the next few years having factories here. But if it's something that sets up where in 5 or 6 or 7 years we've got a different economy, then maybe it ends up being a better place, but not near term.
Stephanie, great having you on the program. Hope you come back soon. Stephanie Guild there of Robinhood. I'll check out your strategies. What was it called?
Robinhood Strategies.
Robinhood Strategies. That makes a lot of sense. Coming up, President Trump's tariffs are dealing a blow to Toyota's operating income. We'll bring you the details of that story next. This is Bloomberg Open Interest. Let's get now to high interest. A look at what's making headlines around the world. U.S. labor productivity fell for the first time in nearly 3 years as economic output fell. The data snaps a streak of efficiency gains. The decline in productivity led to a 5.7% jump in unit labor costs. That's the most in a year. The Fed pays close attention to the data because productivity gains help curb wage inflation. Labor costs are the biggest expense for most businesses. And the Kohl's board has formed a search committee to find a new top chief executive after its CEO, Ashley Buchanan, was ousted last week. Kohl's said Buchanan directed millions of dollars of business to someone with whom he has had a personal relationship in violation of the firm's ethics policies. Buchanan had only been CEO for a few months before he was let go. And a diamond is forever unless it's synthetic. De Beers announcing today it will close its lab-grown diamond jewelry brand Lightbox. The company's technology unit, called Element 6, will still focus on synthetic diamonds. De Beers has been shifting its focus away from lab-grown diamonds and back towards the natural stuff that they pull out of the earth in a somewhat ethically questionable way. Shonali?
We are going to switch now to the pharmaceutical industry. Matt and I have been talking about it all morning. President Trump is reviving a plan to slash drug costs. According to Politico, he's planning on tying the amount the government pays for some medicines to lower prices abroad. Joining us now, the CEO of the leading platform for medication savings in the United States, Wendy Barnes of GoodRx. Very curious, Wendy, to hear what you think about the administration's plans. Can it be successful, particularly in the face of so much pushback from the pharmaceutical industry?
Yeah, hi, good morning. Thanks for having me. Look, I would start by saying, the regulatory environment is just wildly uncertain right now, particularly coming out of this administration. But what I would also say is any effort to improve affordability for Americans, whether Medicare, Medicaid, or general commercial or uninsured, we applaud. Truly, that aligns well with our vision and mission. Candidly, I think it's too early to weigh in on whether or not this will be successful. But again, if it's pointing to more affordable drugs, we're in favor.
But do you think there's actually a possibility? We were talking earlier about the fact that the U.S. essentially subsidizes drugs for the rest of the world, and the differential is large, Wendy. Is there a way in which that changes in the next 5, 10, 20 years significantly?
Yeah, I think it's going to be challenging, Matt, to truly impact that, delta, as you point out. I would also add that onshoring manufacturing, as I'm sure you've heard from a number of pharmaceutical manufacturer CEOs, this is not a fast turn opportunity, right? These are things that are going to take years to truly pull off, despite, I think, removal of administrative hurdles to do so. We also know that in onshoring drugs, study after study are proving out, to include our own research, that it's going to result in higher prices as well. These aren't going to be inexpensive to onshore. And so what that means generally for us as consumers, and in particular GoodRx, is that employers, payers, we know they have a finite pool with which to support their benefit, particularly prescription benefits. What that points to is, again, those higher prices are going to create an ongoing opportunity for more cash prescriptions. And we view ourselves as a complement to insurance. The overall vision mission will continue to be that complement to insurance. I view us as sitting alongside insurance. It shouldn't be an or, it should really be an and whenever there's a cash price that can beat out your insured price to include when you're in your high deductible phase, that's what the experience should be at the point of sale, the counter, whether it's home delivery, however any of us as consumers obtain our prescriptions.
Wendy, I want to talk about your results actually as well, because the street reacting very positively. Your stock is up 13% or more this morning. You have Leerink saying that GoodRx has been an underappreciated margin expansion story, and you have been very much holding up your estimates for the year. What do you think you're doing differently than other CEOs are doing right now?
Sure. Well, it's a good question. Look, it's a tough environment for sure, just giving regulatory swirl. But, so I've been in seat since January 1st. And what we talked about early on, both myself and the broader team, was that we need to focus on a few strategic imperatives. And it starts with ensuring that pricing is fair and affordable at the counter. That also includes ensuring that our partners who actually fill those prescriptions, retail pharmacies, can be profitable in doing so. We've done that in a couple of ways. As we continue to expand our partnerships with manufacturers around those affordability programs and specifically around brand drugs, where we're obtaining a point of sale cash buy down, we're sharing those economics with our retail pharmacy partners so that they too can be profitable on filling those prescriptions. While I think those of us who sit in this industry day in and day out have long understood pharmacies are typically underwater on filling brand prescriptions, it's not something that's well known otherwise. So we are conveying the ability, sitting at the middle of this system with the manufacturer, with the retail pharmacy and the payer and ultimately the consumer, we have an ability to convey that value. And so as such, it's working for all parties. I think that's one reason that we're seeing the results that we are. Well, additionally, those same brand partnerships are allowing us to have conversations with payers, specifically PBMs, to also wrap those non-covered brand drug price points around our integrated programs with payers, which means that those of us who have insurance, and many do, should have the ability whenever the funded price doesn't make sense or whenever the price point is not covered at all, so the drug isn't covered, to be able to have that wrapped in benefit at the point of sale. So that is probably thing two. The last item I would point to is that our connectivity to healthcare professionals, those are prescribers and the support staff in offices. Pharma is now seeing that our connectivity to over 1 million of those prescribers every year who engage in our platform, it's a willing and able audience. We're a trusted brand in partnership with those HCPs. So pharma is now saying, oh, we should partner through you to be able to reach those same prescribers. I think you put those three things together, and that what is largely pointing to the execution thus far, a quarter in.
Wendy, great to have you on the program. Hope we can get you back again soon. GoodRx CEO Wendy Barnes. This is Bloomberg. Let's get a quick check on the markets as we see optimism for a deal between the U.S. and the U.K. The S&P 500 up 0.5% right now. The Nasdaq gaining 2/3% on optimism for chip exports. This is Bloomberg.
You have weakening of consumer and business sentiment. You get a short and shallow recession by Q4. It's going to be short and shallow because then the Fed is going to cut rates since inflation expectations are the anchor. But we'll have a short and shallow recession by year-end. That's probably highly likely.
That was Nouriel Roubini offering his outlook for the U.S. economy, talking about inflation expectations that are de-anchored. We are looking at headlines now crossing the terminal that Trump officials are considering fast-track deals with Gulf wealth funds as well. Of course, we're all here for the U.S.-UK deal that is expected to be announced imminently on Pennsylvania Avenue. And you've got media sources like The Telegraph in the U.K. saying that part of that deal is going to bring tariffs on UK-made cars down to 10%. So if you have an order in for a Range Rover or a Rolls-Royce or a McLaren, the good news is it'll only cost you 10% more than the sticker. Joining us now is Bloomberg's head of economics and government, Stephanie Flanders, out of London. Stephanie, first of all, great to have you on the program. Thanks so much for joining us. What do you make of this deal? The president says it's going to be full and comprehensive, but we've heard those kind of deals take years to negotiate.
Yeah, this is the tension. I think we're going to have this again and again about the deals that the president announces, because, you know, if you're involved in trade negotiations, if you've covered trade negotiations, you know that they take a hell of a long time. And they involve Congress usually, and they take years to ratify. We've never been talking about that kind of thing. We've never been talking about a comprehensive trade agreement with this deal over the last few weeks that was being negotiated. But we will be looking for how much certainty it gives UK manufacturers, UK importers and exporters, because, as you know, the big hit, you know, arguably outside China, the biggest hit for US trading partners from Donald Trump's shift of approach, from his trade wars and the tariffs, is not just the level of tariffs, but as the uncertainty around them. So if, even if, we don't get a kind of the removal of all the new tariffs, the expectation is there's going to be that 10% baseline is not going anywhere. If there is some certainty that the other sectoral tariffs that might be coming down the track, pharmaceuticals and other areas, electronics, if there's some protection for UK producers in that sector, then that will be a useful thing for the UK government to have got. Nothing earth-shattering, but it would certainly be useful.
Speaking of certainty, I was looking at my little monitor here, Shonali, and I thought that was St. Paul's behind Stephanie. It's actually the Capitol building. So you're not in London.
Washington, I'm sorry.
She's in Washington.
Very much in Washington. And, for Washington, the interesting thing about this is the total trade between the U.S. and UK really is dwarfed by many hundreds of billions when you think about the U.S.-EU relationship. However, Stephanie, how much does this trade agreement set the tone for the types of agreements we might see in the future, given that these won't be complete? As you say it takes years.
Well, I think it'll be interesting whether this really is a model for future agreements. Remember, it was supposed to be easier than many because the UK has a surplus or the US has a surplus with the UK, or US actually sells more to the UK than the other way around, at least in terms of goods. And there was not, as you suggest, there's not the kind of scale. There's just the amounts involved are much smaller. But I think we will be looking for some sort of signs for the future, not least whether or not Donald Trump is willing to move on that 10% baseline. The expectation is not, but also whether he's willing to kind of offer any promises on these future sectors in advance of those announcements. So things on electronics, on cars, any of those things. Is he willing to move on those, or is he just looking at the reciprocal? Is he just looking at sort of mood music, like whether they're going to be nice to EU tech firms? The UK has a tax specifically on the big digital service providers, which affects big US tech companies. If that goes away with this deal, then that might tell us something about what he's pushing for with Europe. So there could be some signs, but there also is a rather different ground to cover in the EU deal.
Stephanie, we were talking with Stephanie Guild from Robinhood a little bit earlier, and she was saying, and I think a lot of people in the market are hopeful for a world in which we get to zero tariffs on both sides, right? That this is maybe a negotiating ploy to get us to at least lower tariffs than we currently live with. But we do hear the president often say he expects to bring in real revenue with tariffs, and maybe not just for 1 or 2 quarters. He wants to replace at least some income taxes with tariff revenue. So which is it? Does this White House want to raise revenue with tariffs to keep tariffs on foreign economies? Or does this White House want to negotiate with that idea and get tariffs down to where we have freer trade globally?
And you could add a third one. Scott Bessent has also talked about a third way of using tariffs, which is just to get other stuff that you might want. Remember, it's been used as leverage with the Colombians, with the Mexicans and the Canadians when it comes to things like fentanyl. So there are many, many things that this one tool is supposed to accomplish. It usually gets you into trouble if you're a government. From what there is a consistency, although he changes day to day. If the sort of drumbeat from the president ever since he was elected was that there is going to be an entry fee for trading with the US, and it doesn't feel like that's going to go away. I may be proved wrong in a few moments, but I think the idea that there's just going to be, just as you have to pay a price for admission to golf clubs and, resorts and things that Donald Trump tends to, he thinks in those terms, Mar-a-Lago, though the price has gone up a lot. That's the kind of the way he thinks about the trading system. The US is a great place to do business, and you should have to pay to play. So I don't think that's going anywhere, but it is obviously very important for manufacturers whether you get into a kind of 10% zone or whether you're still in, for other countries, whether you're still talking about 30, 40, 50%. When it comes to China, we were talking about it this morning, you could potentially get back to the original Liberation Day tariffs for China in a deal, and that would be, slashing the current tariff rate. But if you're a manufacturer of the goods that are going to the US, the difference between 140% tariffs and 50 is actually not as great as you think. It's still going to blow you out of the water.
Stephanie, you had mentioned the Treasury Secretary, Scott Bessent. And of course, there's that Switzerland meeting that will include the Chinese Vice Premier. Isn't this the elephant in the room ultimately? What are you looking for in terms of those negotiations, given that that's the bigger trading partner we're talking about here?
Yeah, and I think it's very interesting that we have the US Trade Representative Greer and Scott Bessent involved in those deals. We weren't in that negotiation in Switzerland. We weren't sure that was going to be the case. They have slightly different perspectives. You know, we think of Jameson Greer as being a bit more of the sort of harder line school on tariffs. Scott Bessent has sounded a bit more conciliatory, that he would expect to see tariffs to come down significantly. So even just having them both in the room is an interesting thing to contemplate. But I don't think there's an expectation that we're going to have, you know, anything like a framework agreement come out of these meetings. But we've at least got past the stage of, like, who's going to pick up the phone. We seem to have got, you know, we are now getting them both all in a room.
Stephanie, great to get some time with you. Really appreciate it. Stephanie Flanders is the head of Bloomberg Economics and Government. She is in Washington, D.C., standing from a backdrop of the Capitol that is not St. Paul's. I will say, when I worked in London, my backdrop was St. Paul's, and everybody thought I was in Washington all the time.
Well, you know,
the domes are eerily similar if they're in a small picture.
Well, the new power center is what we're taking a look at now. And it's interesting because the leverage in this negotiation, remember, is not the same as you see in the other negotiations that are being had throughout the weekend.
Yeah, and I also think there's an argument to be made that this is a different kind of relationship, right? That special relationship. We know that President Trump really appreciates the royalty of the United Kingdom. He's going to meet with King Charles. He went and met with Queen Elizabeth. So we'll see how much of a blueprint this proves.
Is he going to react to the EU? In some ways, the UK news is being dwarfed by the EU's retaliation. These are much bigger dollars that we're talking about, Matt.
Yeah, and it's a problem for American manufacturers as much as we want to believe it isn't. For Harley-Davidson, it really hurts to have these kind of tariffs. We'll continue to talk about this, and we're going to get you to the White House as well. I want to get a quick check on markets before we do that. Right now, we continue to see gains in terms of the equity indexes. Right now, up 0.5% on the S&P 500. Remember, we closed up almost 0.5% on the S&P 500 yesterday after the Fed. We have the NASDAQ gaining about 0.6%, which is maybe a little less than you might expect, right? Because we have the president also talking about pulling back on chip export curbs that were put in place at the end of the Biden administration. And you would think that would drive NVIDIA shares higher. But right now, we see NVIDIA actually a little bit lower, about 0.3%.
Fascinating. And we're certainly off of session highs for both indices. And actually, the 10-year now up on the day. We had a little bit of relief in the bond market. Not today. Anyways. Coming up, President Trump's tariffs are dealing a blow to Toyota's operating income. We're going to bring you the details on the car maker next. This is Bloomberg Open Interest. Now, we want to circle back to news that broke just a few moments ago that Trump officials have discussed the possibility of granting the UAE, Saudi Arabia, and Qatar a special fast-track status for deals. The move could smooth the way for billions in investments. We've already seen some of them come through. Here with us now from the White House, Bloomberg's Tyler Kendall. And it's interesting, you think about, for example, Saudi Arabia already being a part of the AI announcements, and now he is opening a much bigger door to the Middle East, where we know the Trump family has had a lot of contact over the years. What does this mean in terms of the types of investments this could bring into the United States?
Right, exactly, Sonali. Potentially trillions of dollars of investments, considering that these sovereign wealth funds in the Gulf states really do oversee such large amounts of money. And I was there at the FII summit back in February, of course, backed by the Saudi Arabia wealth fund, where President Trump really made his case that he wants to see more foreign direct investment from these countries flowing in to the United States. Now, officials do caution us that at this point, nothing has been decided. These are preliminary deliberations, but they are looking at potentially changing CFIUS, the Committee on Foreign Investment in the United States, that reviews these large-scale potential investment sums when it comes to national security concerns, really potentially opening up the door here to more deals with these Gulf states. Important to note, of course, these are the three countries, the UAE, Saudi Arabia, and Qatar, that President Trump is going to be visiting later this month when he starts his tour of the Middle East.
First of all, I feel like there's somebody with a leaf blower walking around behind you, which is a pretty unfortunate thing for them to be doing. They got to keep the White House clean. In terms of the chip exclusions or export curbs, what do we know, Tyler? Because NVIDIA shares aren't reacting positively today, but it seems like it should be really good news for the tech sector.
It seem like it would be good news for the tech sector, considering that they have been lobbying this White House to back off that AI diffusion rule. But officials do tell us that that doesn't mean that no rule is going to be implemented. Rather, it's just going to be less complex, according to a senior official in the Commerce Department. And when you really look at this broadly, this White House has taken more of a stick versus carrot approach when it comes to these chip makers. In fact, you have some big tech execs on Capitol Hill today, including OpenAI, CoreWeave, Microsoft, AMD, all testifying in front of Capitol Hill about exactly what they need to get ahead when it comes to the AI race and chip production. And a lot of that does have to do with things like tax credits and subsidies that up to this point, this White House has really been more hesitant to put forward and give to them. What the actual rule does look like going forward does remain to be seen, but it does appear that we are moving back from that idea of a three-tiered country system that would lump some of these countries, including many U.S. allies, into more stringent restrictions when it comes to export controls on chips.
Tyler, we appreciate all of your reporting. That is Tyler Kendall from the White House. And you know, Matt, it's interesting. There is a massive tie-in here between the story about the Middle East and what you're seeing with the chip curbs, because the UAE is racing to become a tech powerhouse. They are looking to get greater access to NVIDIA chips that had been restricted during the Biden administration. And when I talk to my sources across Wall Street, they're also looking to the Middle East to be a bigger data center hub, an energy hub as well for those data centers. So strategically, this is a really interesting alliance.
Yeah, and that's a huge part of it. All right, really interesting context there. I want to switch gears, though, now to automotive, because The Telegraph has reported that the U.S. will cut tariffs on UK-made cars to 10%. Joining us now for more is Bloomberg's Global Autos editor, Craig Trudell. Craig, very interesting reporting in The Telegraph, and this would affect, well, Shanali's concerned about the Range Rovers first and foremost, but some of the most expensive cars in the world, right? Gordon Murray Automotive, Aston Martin, McLaren, McMurtry, and Rolls-Royce. How significant is this?
It's big for some of those, high value vehicles, but I would, sort of to put this into context, you have the UK ranking 6th on the list of countries with the most most value of vehicles imported into the U.S. last year. And it was much smaller in terms of value than some of the leaders, which, Germany, South Korea, also, even Japan also on that list. So while this is important for some of these players and even some of the, more affordable models like Mini comes to mind, it is a big deal for the UK, but in terms of the US market impact, it's much smaller than some of these other countries that are being hit. I should throw Canada and Mexico in that mix as well.
Craig, I do want to focus on the Range Rover here for a moment here, because we're talking about very, very popular cars in the United States. And, you even had the Telegraph leading with the name. And if it is easier to access them, how big of a deal is that type of relief?
It's really important because JLR has had real issues. They are even taking out the Jaguar brand for a significant period, and as Matt knows and will appreciate, we're sort of given quite a bit of grief for this grand redesign that they're attempting with this brand. They're trying to go all electric and really different and out there with their positioning. That sort of leaves the company with the Land Rover side of the business that it's entirely relying on in the meantime. And JLR is right up there with Nissan as the depending on the year, either the biggest or second biggest manufacturer in the UK. So for them to be hit by these much higher tariffs, with the U.S. market being so important to that company, this was a major issue and a real concern, here in the UK over, just how long these tariffs were going to last. And you saw, Land Rover for a time there even, go so far as to suspend shipments because they wanted to try and wait this out.
All right, Craig, great to have you on the ground with us. Craig Trudell there in London, in the UK, where we're getting these headlines from. Again, the Telegraph saying that the Trump administration has a deal with the U.S. and the UK that will reduce tariffs on UK-made cars imported into the U.S. To 10%. I would be remiss not to mention Caterham is another one that people are writing in to me about. Lotus is one that people are writing in to me about. Morgan, famously making wooden-framed cars, including a three-wheeler. So not huge markets, but this will be some relief to those who want to buy those niche products.
And while we're waiting for the actual word from the president himself, I want to bring you some headlines going on at the event. We'll bring you the news as we get it, the feed as we get it. He speaks in the Oval Office. He is saying that it's a tremendous deal for both countries. He's saying this is a very special day. He says he's reached a great deal with the UK. Still light on details out of the White House, but we will be following it and bringing it to you as we get them.
Yeah, talking a ton about deals really today, saying that he's reached a rare earth deal with the UK. That's a tremendous deal for both countries. With Ukraine, and saying that that's a tremendous deal for both countries. So far today, in terms of deals, we can round it up, right? We've got the US-UK deal that he says is full and comprehensive. We've got the Mideast Wealth Funds deal and Ukraine. Let's get to the White House right now and listen to President Trump.
The past 4 weeks. With this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle of international trade. The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our great farmers. And our Secretary, as you know, of Agriculture is here. Brooke, thank you very much for being here.
It's a good day. Thank you, sir.
You'll let the farmers know. In addition, the UK will reduce or eliminate numerous non-tariff barriers that unfairly discriminated against American products. But this is now turning out, I think, really to be a great deal for both countries, because it'll be really great for the UK also. So they're opening up the country. Their country is a little closed, and we appreciate that. They'll also be fast-tracking American goods through their customs process, so our exports go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways. The final details are being written up in the coming weeks. We'll have it all very conclusive, but the actual deal is a very conclusive one. We think just about everything's been approved. So good for both countries, and we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed, and they'll end up getting products that they'll be able to price, and if they like them better and we make great products, they'll be buying those products, but they were not available in the UK. Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that because it's been a great ally, truly one of our great allies. I mean, a lot of people say our greatest ally. I don't want to insult people by saying that, but I can say it's certainly one of our greatest, and right at the top. And they're the first one we're talking about. And by the way, we have many meetings planned today and tomorrow, and every country wants to be making deals. And we have a meeting, as you know, Scott will be going over to Switzerland on Saturday, and that'll be very, very interesting. We'll find out, but I think they want to make a deal very badly, too. Both countries have agreed that the economic security is national security, and will be working together as allies to ensure that we have a strong industrial base, appropriate export controls, and protections for key technologies and industries like steel. Steel is a big factor. Both countries will become stronger with steel and things necessary for military. You know, we used to build ships and other things literally at a level that nobody's ever seen, and we haven't. We've eased up, and I would say that the UK certainly eased up, but now we're going to be uneasing both, and we work together. Once again, I want to thank Prime Minister Starmer. He's been terrific for his partnership in this matter. The special relationship and external bond. It's really an external and an internal bond between our two countries will soon be stronger than ever before. And we really do. We have a great relationship. I want to just say that the representatives of UK have been so professional. And it's been an honor doing business with all of them, and in particular the Prime Minister. And I'd like to introduce him now to say a few words. Mr. Prime Minister, please take it away.
Thank you, Mr. President, Donald. And this is a really fantastic, historic day in which we can announce this deal between our two great countries. And I think it's a real tribute to the history that we have of working so closely together. Can I pay tribute, Donald, to your negotiating team as well, particularly Howard and Jameson, who've done an incredible job, a very professional job, and my team as well. Two negotiating teams have worked at pace now for a number of weeks to bring in this deal today. Really important deal. This is going to boost trade between and across our countries. It's going to not only protect jobs but create jobs, opening market access. And as you say, Donald, the timing couldn't be more apt, because not only was it 80 years ago today that victory came for Europe after and at the end of the Second World War, but of course on that day the UK and the US stood together as the closest of allies. And Donald, I think even down to the hour, because you may or may not know that it was about this time of day, exactly 80 years ago, that Winston Churchill announced victory in Europe, and that led to great celebrations across Europe, across America, but particularly in the United Kingdom. Literally people going out into the street, putting bunting up, going up to the palace. And so to be able to announce this great deal on the same day, 80 years forward, almost at the same hour, and as we were 80 years ago, with the UK and the US standing side by side, I think is incredibly important and makes this truly historic. That close relationship has endured over those 80 years. As you know, Donald, when it comes to defence and security and intelligence sharing, of course, there are no two countries that are closer than our two countries. And now we take this into new and important territory by adding trade and the economy to the closeness of our relationship. It is built, as you say, on those notions of fairness and reciprocal arrangements. We've always had a fair and balanced arrangement between our countries. This builds on that, hugely important for sectors like car manufacturing and for steel and aluminium and so many others. And yes, we can finish ironing out some of the details, but there's a fantastic platform here, including, of course, on the tech side, where I think I'm right in saying we're the only two Western countries with trillion-dollar sectors when it comes to tech. And in the end, it comes down to, as you say, Donald, economic security is national security. On national security, we've been absolutely the closest of allies for so many years, keeping the peace through that close alliance, that friendship. And now we add to that this deal on trade and the economy. And I want to thank you for your leadership on that, Donald, and for the way in which your team have negotiated this. And I'm so pleased that we've got this deal, we've finalised it, and we've built an incredible platform for the future. So thank you so much. Donald, I'm now going to go and do a press conference. I think you have your press in with you. But on the details, I think if you've got Howard...